What is the difference between a group disability plan at work and an individually owned disability policy? Well, by the end of this video, I'll give you the key differences between the two plans so that you can make an informed decision. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the bell notification so you'll be notified when we launch a new video. If something had happened to you last night and you could no longer work, the question I usually ask is, what is going to be your monthly paycheck? Well, if this happened to you, the product that you can put in place is something called a disability insurance policy. And that policy will put out a monthly income for the rest of your working life. Now, with a group disability plan, you're really limited to what the Human Resources Department has negotiated or the Benefits Department has negotiated. And depending upon where you work, you might have something called flex dollars. And flex dollars can be used to help fund your life insurance, disability, medical, and dental plan at work. The key issue that I see with flex dollars, though, is that you need to use them correctly, because if you use the flex dollars to pay any or part of your disability group plan at work and you go on claim, then the money that you receive on a monthly basis would be taxable income. However, if you only use your flex dollars to cover off for the life insurance and the medical and dental, and then you pay for the disability insurance at work through your normal payroll deduction, and you go on claim, then the money that you would receive would be 100% tax-free. So that's very key, that if you do have flex dollars at work, that you don't use them to pay for your disability insurance policy at work. Also, if you're an incorporated individual and you have an individual disability policy, it's also important that you pay for those premiums personally and not corporately. Because if you pay them personally and go on claim, you will receive the benefit 100% tax-free for the rest of your working life. Leave a comment in the section below and let me know what features you have in your group disability or individual disability policy, or whether or not you're shopping to actually implement a disability policy. Both group and individual disability policies allow you to have this key feature. It's called cost of living adjustment, or COLA. And what that means is that once you go on claim, every year like clockwork, your benefit will go up by the cost of inflation. Now, here's the big issue with group disability policies, and it is a flaw right across Canada. Every group disability policy comes with own occupation for the first 2 years of coverage. So if you go on claim, for the first 2 years, the insurance company can't force you to do any other job that you were doing the day before you were disabled. But after the 2-year time period, the insurance company, if you go on claim, can force you to do any job that you are capable of doing. And any income you get from that job would then be subtracted off from the disability payment that the insurance company is paying for you. Now, here's how we solve that problem, though. If you have a group disability plan at work, read the fine print, and you will see what I'm saying is that after 2 years, the definitions change from own occupation to any occupation. And how we fix this problem is we put in a very cheap and cheerful individual disability policy, similar benefit to what you have at work, but we put in a 2-year period of a waiting period so that it kicks in after 2 years. So your current disability policy at work would pay you for the first 2 years, but once the definition changes from own OC to any OC, this second individual disability policy would kick in and continue to cover you. And then the insurance company can't force you to do any other job than the job you were doing the day before you were disabled. Now, only an individual disability policy can have the following feature, and it's called the return of premium. And so if you do have this feature in your disability policy, every 8 years like clockwork, so 8 years into the policy, 16 years, 24 years into the policy, you're going to receive 50% of the premiums back if you haven't gone on claim. And so this is a really good feature to have, because either you're going to get a disability or at least you're going to get 50% of the money back that you put into the policy. If you are a professional like a doctor or a dentist or a lawyer or an accountant, there's additional discounts for professionals, especially if you have a university degree or a master's degree. You do qualify to get a reduction in your disability policy premiums. If you'd like to learn more about disability insurance, You can click on the link below to apply to become my client. If you like this video, give it a thumbs up, subscribe to my channel, and share it with a friend. Thank you very much for watching. And always remember, when we develop financial plans for our clients, we always make sure that their money outlives them in retirement.